Okay, perfect.
Sweet.
Let's do the intro. This is episode 37 of the Bearish podcast. We have Brad Kaellner. Is that correct? How you pronounce it?
That's right.
All right. He has a very, very, very awesome YouTube channel called the Stock Coumpunder. Amazing. Brad, go ahead and just tell us a little bit about yourself. First of all, though, we appreciate you. Really, really do appreciate you coming on and joining us today.
Thank you.
Yeah, absolutely. Well, I really got into the world of investing through Monish Pabrai, who himself is a shameless cloner. I am a shameless cloner of Monish Pabrai and a few other great investors. So I really feel like I'm at the beginning of my journey. I mean, it's just been a couple of years since I've been picking individual stocks. So it's very exciting. Just deep in the weeds, learning about this stuff myself.
Yeah. So you've been doing it for 5 years, you said?
Yeah, about 5 years since I started buying stocks. But in terms of cloning, it's only been a couple of years. Yeah, maybe 3.
Have you been paying attention to the market for longer than that, or what?
No, actually, before 5 years ago, I had no interest in it. I thought it was snake oil. And so I stayed far away from it. But, you know, I started to appreciate over time the power of compounding. And it's just so incredible. Really reading what Monish Pabrai, I think he had an article in Columbia Business School or something like that. And just how he saw that Buffett from an early age was really able to grasp compounding. Like 11 years old is when, you know, Buffett really started the compound engine. And I just realized, you know, it took me a lot longer than Buffett, but oh man, there's some incredible leverage to be gained from, you know, this compounding machine. So that's really what inspired me to get into it.
Yeah, everyone we've had on the podcast, you're the third person. We had Investing with Tom, who was a part of your punch card investing, and we had CJ Wilson. I think you guys had him on one time.
We did, yeah, as a guest.
Yes.
Yep.
So both of their answers as to why they got into stocks is the exact same as yours. It's the power of compounding.
Nice.
They both said, well, they had jobs and then they did the math and then they realized, oh man, at the end of when retirement comes around, I probably won't have enough to live off of. So,
well, it must be true, right? If all three of us said the same thing.
Yeah, I'm seeing a pattern for sure.
I got to give you guys a shout out though. 21 years old. I mean, you guys have an incredible runway ahead of you. How many 21-year-olds are sitting here, you know, thinking about investing and putting money behind it? It's pretty awesome. So pat yourselves on the back.
Well, a lot of them are, I wouldn't say investing, but they think they're investing, if you know what I'm saying.
That's what I was going to say.
Yeah.
I think there's been a really big resurgence lately.
We're in a bit of a bubble here, so I get it.
Yeah. Yep. So just to start off, because, you know, we're young, so I like to soak things in, you know, be a sponge, if you will.
Let's do it.
What's your decision process with first buying, and then we'll get to the selling aspect because that's a bit different. But with buying, what's your decision process? How do you juggle that?
Sure. Well, the top of my filter, and I was happy to see Matt Peterson talk about this in his annual meeting recently. I don't know if you guys have watched that, but the top of the funnel for new ideas is, do great investors own it, and have they bought it recently, right? So that's the shameless cloning piece. And then am I interested in the business? Because if I'm going to be holding this thing for a decade or multiple decades, I want it to be a business that I'm interested in and actually want to learn about as it evolves. So those are two. And then can I understand the business, which is tied into, am I interested in it? If you're interested in something, you know, you're going to put the effort forward to learn about it. So, and then does it seem like a reasonable price?
Yeah.
There's some other things like, is there skin in the game from management? There's a lot of different things you can look at, but those are a few of the ones that I really focus on.
Now, what about selling? Because no one talks about selling, Brad. Nobody talks about selling. Everyone's saying,
a reason for that.
Buy this, buy this stock, buy this stock. No one's like, hey, this stock's done pretty well, you should probably sell it.
Yeah. Selling is tough because a lot of the biggest mistakes I've seen from great investors happen around selling, where it's whether it's selling, it's selling too early most of the time. You hear Monish Pabrai. It's actually Guy Spear. He bought Crystal, I think back in the early 2000s, which is the equivalent of Moody's in India.
Okay.
It's a credit rating agency. He bought Crystal. If he had just held Crystal, it would be worth more than his entire current fund of 200 some $1 million. Okay.
That's
so that's
annoying.
The power. It's very annoying. That's the power of these great businesses. Ferrari, Monish Pabrai sold out of Ferrari way too early. Didn't recognize how great of a business it was. So I don't even remember the question, but
selling. How do you go about selling?
So have you guys read 100 to 1 in the stock market?
I've not. So
in that book, Thomas Phelps says every sale decision is admission of an error. Okay. Now that's not always going to be true depending on your investing framework, right? That lines up with my framework. I want to hold companies forever, or at least as close to forever as I can get, because that's where I'm going to be doing the compounding. It's not, moving money between different companies, all of that trading stuff. That's just getting in my own way. So, yeah, but it's hard. Obviously, there aren't many companies that crush it for decades on end. Now, Terry Smith is a guy who I've dug into recently. I don't know if you guys saw my video about Terry Smith. He's in London and he runs a fund called Fundsmith. And the sole objective of that fund is to find companies that they can hold forever. Okay. And, the metrics that they look at return on capital employed. They look at free cash flow yield. So return on capital employed is the primary measure of how great is a business. Free cash flow yield is how much am I paying up for the business.
Right. And
he's willing to pay more in terms of free cash flow yield than the index is currently priced at. Because, Charlie Munger's quote, if you own a business that generates a 6% return on capital, even if you get it at like 80% off, right? You're paying 20 cents for $1. You're not going to earn much more than that 6% over decades. But if you overpay a bit for a business that does 20% return on capital over decades, you're going to get pretty close to that 20%. So that's something a lot of investors don't understand. They look at price to earnings ratios and some of these other kind of easy to derive metrics. And it's just not what moves the needle over many decades. So selling is tough.
Yeah. CJ said that selling, I think he put it in two ways. He said, one, if there's an opportunity cost, like if your investment went up double of what its intrinsic value is, and you see, for example, Alibaba, I think he used over there $150, now you should probably sell and buy Baba, you know what I mean? And then I think the other one, I don't remember off the top of my head, but if I do, I will be sure to bring it up. But also, because I mentioned Alibaba, I know Logan had a question about Alibaba. So Logan, go ahead.
Well, I want to mention real quick first, in terms of selling in order to buy something else. I mean, you guys are 21, right? There's going to be income coming in constantly. So I prefer to use that income that's coming in to buy something like Alibaba rather than tinkering with the portfolio as I see it, especially if the business, that you already own is getting better. That's kind of the primary question about whether or not to sell. From my perspective. Yeah, go ahead.
Yeah, so I've seen you have a few videos touching on like the subject of Alibaba, and I think it's also a topic that a lot of our followers are interested in as well. And that is, do you see Alibaba as a safe long-term investment, even with the uncertainty of the Chinese government and economy where they are today? I know there was big news concerning the Chinese government today that kind of made the stock market as a whole kind of go down. What are your thoughts on that?
Yeah. So Rob, have you guys read the latest letter from Rob Vinal?
I have not, no.
He's an investor in Switzerland, RV Capital. I did a video about it a while back, but he has some really great points in there about China and regulation, and just, how do we wrap our minds around that as U.S. investors? It's a different framework. Pabrai in one of his talks framed it as, in China, it's innovation and then regulation, right? And so if you see it like that, you can look at regulation as not necessarily a bad thing for these companies.
Okay.
It's kind of ideally moving them in a direction that's sustainable in the long term,
Right.
and in the best interest of, the economy, the society.
Sure.
So, what's happening, if you look at the fines, right, that have been imposed on Alibaba as a percentage of, the cash on the balance sheet, yeah, it's small. It doesn't scare me.
Right.
Right.
But it's human psychology, right? If you hear all of these things about regulation or in China happening in the news, it just feeds on itself, and people get more and more worked up about it. It's textbook human psychology. So it doesn't faze me.
Absolutely. Great answer. Thanks.
Sure.
Yeah, Alibaba's that one. I own it. I bought in. I think my initial buy price was 212, and I've just been riding that thing down.
Have you been buying it going down?
Yeah. I've been buying down. I think my average cost basis is about 179. So
Nice.
yeah, not too bad. I think it hit a low of like 148 today, and I was like, geez,
Oh, wow.
man.
I haven't looked.
Right. I mean, there's no point. If you're going to own this thing for 10
Yeah.
years, there's no point in looking.
There's only a point in looking if you still want to pour cash into it, right?
Right.
Sure.
But hey, you beat Charlie Munger by a long shot on that. I think his cost basis is like 230s, I would guess.
Yeah. And last quarter, I saw Monish Pabrai, he added another 50%, right?
Yep.
Yeah. I mean, so
he's doing the same thing you are, riding it on the way down.
I think I know what I'm doing. I think all the books that I'm reading is kind of helping out.
That's great, man.
So, yeah, have you kind of read up on what's going on in China? Because me and Logan were just talking about it before you got on. We don't really, it's the Evergrande, and it's like a real estate thing, but we're not really sure what's going on. Do you know?
I don't know much about what's happening in China from like a macro perspective. Yeah,
Sure.
It's kind of beyond me. Really, what got me first interested in Alibaba was seeing that Ray Dalio had a pretty big stake in it with Bridgewater.
Mm-hmm.
And then, seeing Charlie Munger buy in, that was like, okay,
Yeah.
I need to start a position here. But I like what Monish Pabrai says about this. You don't really know a business until after you own it. So there's always a little bit of a leap of faith, I think, when we start an investment position. I think a big part actually of why Pabrai bought it, because he's not interested in these behemoth companies. At least that's not what he said recently, looking for 100 baggers. He is under no illusion that Alibaba is going to be a 100 bagger. I think the main reason he bought it, other than Charlie Munger bought it, right, his mentor, is he wants to really dig into the details of what makes apex spawners special. What is the DNA of Alibaba? Sure, he thinks it's going to do well, right? But I think it's also an educational opportunity for him.
Yeah. I watched an interview. I don't remember who it was, but they said if China's trying to take over the world, they're not going to destroy their best companies. And that was like, because it's easy to think to yourself when you see the stock, catering, you're like, oh my God, like what is that government doing? But like you said, in the long run, this won't even be like mentioned in 10 years. This won't even be like, people will completely forget about this. And the ones that bought when it was dropping are going to, reap the benefits of this. And I guess the question is just how long it'll last, really.
Yeah. Can I ask, do you have like a max portfolio allocation that you're willing to put into Baba as you ride it down?
Not really. I think I'm comfortable where I'm at right now, just based on my cost basis as a whole. But if it drops another, 25%, of course, I'll put some more capital into it. I'm not too worried about the whole risks as like the delisting or
Right.
things like that, the VIE structure. I'm not really worried about that. The only issue with Baba is um when will it stop dropping, I guess. And that's not really an issue if you're a value investor, right? You want it to keep dropping.
Well, you mentioned, what's going on with the government that this thing keeps dropping, but what actually is it that makes the price drop? It's not the government.
Are you asking me because you don't know, or are you asking me because you're testing me?
I'm testing it.
Oh, okay. Well, I think it's just a lot of uncertainty, right?
Well, it's investors fleeing,
Yeah.
right?
Yeah.
Investors are selling. That's what's driving the price down. So, that doesn't necessarily mean anything about what the government doing is bad for Alibaba, right? It's just how investors are interpreting it.
Right.
And when I see, you look at Alibaba through Dataroma and you see who owns it, right?
Yeah.
It is the who's who of incredible value investors. We're missing Li Lu and Seth Klarman and names like that. But I would much rather be on the side of these super investors than on the side of, everyone else.
Yeah. I'm seeing a lot of like CNBC analysts saying, you don't want to be in China. Like if you're in China, your portfolio is ruined. Then
they're just fueling that fire.
Exactly.
Fire.
Yeah. And then I look over and I see like exactly what you said. I see Pabrai, I see Spear, I see Munger, I see all these people. And I'm like, I think I'll ride with them. I think I'll be okay.
Yep. You gotta decide who you want to pay attention to, right? Is it the people who have been able to compound money over decades, or is it the talking heads on CNBC?
Right.
Yeah.
And as a whole, just in general, Alibaba's a great business. They are a bit confusing to understand because of just how big they are and all of the different things they do. But I think I have a pretty good grasp of it. And just by reading their annual reports and especially listening to Monish Pabrai, the company is most bullish on something that's not even profitable yet, and that's their cloud. Right. So, I mean, as with doing a discounted cash flow model, you're not even including the cloud. It's just the e-commerce because that's the only thing that's profitable right now. So, we'll see how that works out.
We'll see how it plays out. Hopefully, we talk in 10 years and break it down.
Yeah, I think we'll be doing okay. Yeah. So I have a couple more questions.
Sure.
Would you ever consider running a fund or starting a fund?
Yeah. It's something I've thought about a little bit. I don't think so. I think I'm more interested in like the Nick Sleep model where, I'm just investing for myself. I don't have to answer to anyone. I don't have to answer to regulators about being too concentrated in whatever.
Right.
It's, managing other people's emotions around money is not a small thing. I think Pabrai's probably done it in a smart way where from the outset, he let his investors know what his expectations were of them and the game that he's playing. I think that's really important. But, if you're good at this, if you can compound money over decades, you get independently wealthy very quickly. And so, I think a lot of the allure of starting a fund is managing OPM and getting the fees on other people's money. But if you're a good investor, you don't need all that to have plenty. That's my take.
Yeah.
What about you guys?
Well, it sounds nice, right?
Yeah.
It sounds nice, but like you said, I mean, that's a lot of personality to control because they're going to be calling you saying, why aren't you selling? The market's crashing. Why aren't you selling? And they're just not going to understand your way of thinking. So I think that'd be fun, but I think I'd get annoyed very quickly. Just dealing with
I would have
stuff.
no desire. I would have zero desire to do that at all. that is not something that sounds even fun to me. It's already stressful enough doing it for myself. Like I don't need to do it for anyone else.
Dealing
I'm
with
good.
your own emotions is plenty for
Yeah.
Logan.
Right, exactly. Yeah, I don't need 20 other people calling me, asking me why I'm doing this.
Yeah,
Yeah.
fair. Logan, do you have any more? Because I have two more for you, Brad. We're trying to go through this quickly, but we still have
Yeah.
about 10, 20 minutes. So Logan,
Yeah.
if you have any more questions, go for
I
it.
actually do. Yeah, I had an interesting one we've talked about on past episodes for sure. And it's kind of sparked some debate. So this will be good. It's do you see the market's growth in the past year and some changes something that's sustainable, or do you believe we're in the midst of an economic bubble that could pop at any time?
Oh man.
Exactly.
Well, I think because of how low interest rates are and the fact that, well, maybe they could go a little bit lower into negative territory, but historically, I mean, they've always had to go up from here, right? Which, puts downward pressure on the price of stocks.
Yeah.
So, in terms of outlook, investing in the S&P 500 over the next, say, decade, I think, expected returns have to be lower than they historically have been in the last couple of decades, is how I'm seeing it.
Sure.
I don't know if there's going to be a big crash that kind of, what that looks like over the next decade. And that's really not my game anyway, but it's an interesting question. Yeah. What do you guys think? You think we're going to have a crash soon?
Well, you said it perfectly. I mean, like just looking at the stock market, I would say, yeah, we're in a bubble. But like you said, the alternative investment, which is bonds, shows us or tells us that we're far from a bubble. So it's tricky. Like if they do raise interest rates, this thing's crashing 1000%.
Yeah.
If they leave them, well, they might as well be cheap at this point, because like 1.4% versus whatever you can get, and I don't know. But you can ask Logan. I've been waiting for a stock market crash for far too long.
Yeah, I was in the
Far
same
too
boat
long.
for a while, and then I was like, okay, this isn't working.
Yeah.
Yeah.
The Fed will do their thing. Whatever. Logan, what do you think?
I don't know. I just think it's funny because I've heard so many times you're like, this is such a good company. They're hitting like all the marks, everything I would want to see in a company, but they're just so expensive. They're way overpriced right now. And I'm like, yep. And I've heard you say that about so many companies.
Yeah.
Well, the nice thing is if you're willing to go to China or Turkey or some of these other places, it's a completely different story. So you can find value. There's always value somewhere.
Mhm.
Yeah, absolutely.
Speaking of that, one stock that I've seen mentioned on a lot of channels is ASUS from
I've
the
seen
United
that a lot
Kingdom, I
too.
believe, right?
Mhm.
Yeah, because I think Nick Sleep bought it. Yeah.
He did. So
Yeah.
I think it was 2019, Amazon was 70% of his personal account, right? It was too uncomfortable for him. So he sold half of his Amazon position. And I think a year or two later, he ended up buying into ASUS, which he had owned in the past.
Mhm.
And ASUS, from what people are telling me, is at like a decade low right now,
Really?
price to earnings. So I looked at it a little bit after I found out Nick Sleep had bought it, after I read Richer, Wiser, Happier. And, it's a fashion company.
Mhm.
I am the opposite of someone who knows anything about fashion. I mean, I wear I think the same 5 shirts in my YouTube videos, right? I only have 5 shirts. So it just wasn't for me. I didn't kick the tires on it, but could be an awesome opportunity for people who care to dig deeper. Have you guys looked at it at all?
Not at all.
I added it to my watch list, and that's about it. I haven't dug deep into the company. Nothing like that. But that's good. It shows your discipline, right? It shows that, hey, I'm not interested in this just because someone bought it. I'm not going to just go out and buy it.
Well, and another challenge is we can't see if Nick Sleep sells, right? It's his personal account.
Oh yeah.
Fair. So when I clone, when it's mostly a clone that gets me into a position, I want to be able to track what that investor does with that position.
Mhm.
Because yeah, you asked about buy signal or sell signals. For me, one of the best sell signals is, did the investor that kind of got you interested or got you into that company, did they sell? If they sold, it's probably worth taking a good hard look at, should I continue holding this thing?
Yeah.
Yeah.
That's
Yeah.
true. All right, I got two more.
Let's
I
do
got two
it.
more for you, Brad.
Okay, I'm ready.
And these are the juicy ones, okay?
Oh,
I
boy.
saved these for last, all right? How did you do last March when the market crashed? Because we over here sold out of everything. We didn't know what was going on. Logan got a tip from his dad saying, hey, you should probably start buying. Logan bought at the literal bottom and did very well. But how did you do?
Wait, real quick, Logan, what did your dad tell you to buy?
He told me to buy a few like infrastructure, like
Okay.
rental equipment companies, because that's the kind of area that
I
he's
see.
in.
Okay.
And he was just like looking at a company. He's like, this company is way, way, way lower than it ever should be. And he's like, you need to buy it right now. And then a few other like tech companies like Nvidia, things like that.
I bet those have crushed it since then.
Yeah,
Oh my gosh, yeah.
and Brad, when I asked my dad about investing, he says buy low, sell high. So it's a bit of we got a little bit of a difference there. So
Yeah, I get it. What did I do? So I didn't sell anything. So I'm,
Okay.
pat myself on the back for that.
Yeah.
But I did definitely make a mistake. I had Uber and Facebook in the crosshairs. I was like, I like this price. And I was like, well, it keeps going down every day. Why buy it now? I'm just going to be kicking myself tomorrow if I buy it now, right?
Oh, no.
So I played the market timing card and it slapped me across the face. I never ended up getting into Uber or Facebook, and just watched the market ride right up into the sunset. So
Facebook.
that was my mistake.
Facebook.
I knew to buy both of those, and I didn't.
Facebook was one of the ones I was fortunate enough to like get in when it was
Really?
extremely low. Yeah.
It was
Facebook
like
got low.
was it like 150 or something? I think.
I
Yeah,
want to say it was something like that.
like 147, I think was
I
the
think,
bottom.
yeah, I think it was 140s.
Mm. If
Yeah.
only, right?
Right.
Yeah. Did you add on to any positions though?
As the market was going down, no.
No.
It happened so fast. It was
Yeah,
almost,
it
I was just
did.
like, I
Yeah.
was just frozen, which
Yeah.
is great because, there's so many lessons there. Like, okay, how am I going to respond when something like that happens again, which it will.
Yeah.
I hope to be a little bit more disciplined in terms of, okay, and I don't have a system figured out yet, but maybe every 25% something falls, like add a little bit. I like that approach when you're in the middle of a market crash. I think which is similar to what you mentioned, Jared, with Alibaba.
Right.
Sort of increments where you put more money in.
Sure.
Oh, here we go. At 10 minutes, the meeting will end in 10 minutes. Last question for you, Brad.
Yep.
And if it's too personal, you can just tell me to shut up. Stocks on your watch list. Let's go with 5 of them. Stocks on your watch list that you are just waiting to buy, just waiting for that price.
Well, we're going to make this real simple. I don't have 5 stocks on my watch list. I have like,
CJ said I don't have a physical watch list. I think you guys are lying to us at this point.
What I decided a couple of months ago, and I got this from Karan Gurnani, who's on Punch Card. Instead of trying to find new companies, I really just wanted to double down on, okay, why don't I just get to know the companies that I currently own better? And so that's one focus. The other focus is, figuring out who the great investors are right now. Who are the great investors of our time, which I've been putting a lot of effort into recently, and just devouring what they've put out into the world about their investment framework. So that's really where my energy is. But I'll give you one.
Okay, there we go. Give us one, Brad.
Twitter is really one that I'm intrigued by. I've gotten so much value out of Twitter. I'm kicking myself for spending so much energy on Instagram and LinkedIn before I even discovered the power of Twitter. But if Twitter can even unlock a small fraction of the value for their shareholders that they're delivering to their customers, it could be a very interesting ride for Twitter.
Yeah. Twitter is, I have Twitter for two reasons. And one of them is sports and the other one is stocks. That's it.
Yeah.
And yeah, you're right. The value, I mean, it's crazy. Twitter's awesome. I love Twitter.
Do you own any Twitter stock?
I don't, but I would like to, because that's a very good point that you made. The value that they provide to their users, if they could provide that same value to their shareholders, I mean, that'd be amazing.
Yeah. So that's one I want to dig deeper into.
All right. I'll give you a pass. You gave us one. You gave us one.
Thank goodness. I want to ask you guys a question. I don't know what it is yet, but you guys are 21.
Yeah, 21.
What got you guys into investing, and how long have you been doing it?
Okay, I'll go first. We have 7 minutes left, so I'll make this quick, Logan, then you can have the other time. I started at the end of 2019. I first downloaded the Acorns app. Have you heard of Acorns?
Yeah, I have.
Yeah. So like every time you spend
it puts
something,
like spare change.
Yeah.
Mm-hmm.
And then it would just passively do it for you. So that's what I did for a little bit. And then I saw this advertisement for Robinhood. Like, oh, this looks cool. Download Robinhood. And I look at all these, pharmaceutical stocks going up, skyrocketing 100% a day. I'm like, that's what I'm going to do right there.
That's where it's at, man.
That's what I'm going to do right there. I'm going to buy right before it does that. And it's not how it works. I figured that out. And then I just became so obsessed with it. And I eventually told Logan. I eventually told the other co-host who's not here, Max. And I switched from, thank God, the pharmaceutical way. And I found Phil Town, read all his books, found Ernest Rai, read his book, Guy Spear, read his book. And yeah, I just fell down this rabbit hole of value investing. And man, I'm hooked. I'm hooked.
Awesome.
Yeah.
You're in the minority. You know that.
I know. I'm going against the crowd.
Everybody investing in crypto, right?
Oh God, don't even.
I was gonna ask him about that. I wish we had time, but yeah.
Logan, what's your story getting
my
started?
Story started out same timeline as Jared, maybe a little bit later, because I started out by making fun of him and Max for how much money they were losing when they first started with the pharmaceutical companies.
Nice.
And then I don't know, it became something that they looked like they were having so much fun with that I kind of wanted to be a part of it. And that's how I got into it. And it started off really short-term investing, I guess. And that was trading. Around. Yeah, exactly. And then, the whole Wall Street bets, GameStop thing came around. And then it's kind of been like, okay, well, that was fun and all, but I got to start thinking more long-term. So now I'm kind of trying to turn into what you guys are today, where it's more like clones, reading up on people who have kind of been in the game and have been doing it successfully for decades, longer than I've even been alive.
Yeah.
So that's kind of where I'm going right now.
Have you bought your first long-term stock yet, Logan? If so, when did you buy it? When did you do that?
I bought it probably 6 months ago.
Okay.
Yeah.
What was it?
What did you say? Neo?
Oh, it was Neo. Yeah.
Awesome.
Yeah. Logan's a big bull.
6 months ago.
Big bull on Neo.
Yeah.
Yeah.
Love it.
Cool.
Another Chinese company as well.
Yeah. There you go.
Yeah. All right, Brad. That's all we have. This was so much fun. I wish we had more time. This freaking Zoom, and Logan's got to go, but this was. I'm gonna go ahead and say it. I had more fun with you, Brad, than I had with Tom and CJ.
Wow.
Don't tell them that.
Wow.
Don't tell them that.
We're not cutting this out, though. We're not cutting it out.
We'll leave it in. We'll see if they actually watch or not.
That's right. If they watch it, they deserve to see it. Okay.
Brad, go ahead and plug your channel and everything. Go for it.
Of course.
Yeah, Stock Coupounder is my YouTube channel, and then you guys can find me on Twitter, where I'm doing more and more at B Kaellner on Twitter. So find me there.
There you go.
Fantastic.
Logan, get us out, my guy.
Was this episode 37?
37.
guys, episode 37. Huge shout out to Brad for joining us on this one. It was fantastic, like Jared mentioned. Our socials, as always, Bearish on the Instagram. Reach us there. We do a lot of polls. That's probably the best way to interact with us if you'd like to. If you want to see really short clips, we obviously have our YouTube shorts, as well as TikTok, which can be really good, especially if you want to get in an argument in the comment section. As we always say, you're free to do that there. And then if you want to see the full videos, we post them to YouTube, as well as our podcast on Apple Music and Spotify. So make sure to like the video, guys. And again, huge shout out to Brad. Thank you for being on this one. We appreciate it.
Anytime, guys. I had fun too.